Welcome everyone to another episode here at Macro Crypto. Yes, the beard is officially gone. Lost a bet. I lost my jiu-jitsu tournament. It is what it is, but I'm marking a positive way to spin this, that the bottom for the crypto market is in. And this is my way of saying, or at least placing a big hopium hit, that we have seen the worst and better days are ahead for Bitcoin, the king of crypto, and all the alts in the space. Ultimately, for the next 3 or 4 months, we'll probably move sideways, really retesting some of those lows, scaring the market, and slowly making our way out for the rest of the year, while leaving everyone on the edge of their seats. But also, of course, yes, for the next 3 or 4 months, we could move sideways and then capitulate off the edge and further go into Goblin Town because the miners are capitulating all of the Bitcoin that they're holding, which will bleed into all these alts, losing all their value, getting a 99% reduction from their all-time highs. Chaos ensues. Yes, anything can happen, but remember, we're taking a big hopium hit and we are just trying to stay positive within this market. And as we dollar cost average into Bitcoin and some of the best assets that you can within your portfolio, no matter what happens over the next couple months, you're positioning yourself for 2024 and 2025. Don't forget that. In this video, we're going to be going over hash rates, what that security looks like. Why is it even so important to understand hash rates as it is in regards to Bitcoin? But also the security aspect of those hash rates and why is security so important for the success of Bitcoin. Also, like we just spoke about with the miners capitulation, the potential of it. We've seen it happen in the past, the price reduction for Bitcoin ultimately taking a huge hit because miners are forced to sell. That leads us into a Bitcoin conspiracy. And, down a dark rabbit hole for a second, just to take you and indulge you on some topics that could or might not be of interest to you. But regardless, that's what we're going to be going over in this video. Let's go ahead, dive right into discussion around hash rate, what that means for Bitcoin and the success that we're going to see hopefully in 2023 and leading up into 2024 and beyond. It is getting cold out there in the crypto space. Bitcoin miners fight for survival as the crypto winter deepens. Trying to understand the Bitcoin hash ribbon presented by Willy Woo over on his Twitter page. What we saw back in 2018, that final capitulation was led by the miners selling off their Bitcoin to exchanges, going bankrupt, or at least trying to break even, selling off all their Bitcoin equipment along with it, being that last catalyst for that final capitulation. You saw this take place in the summer of 2021 when China made their Bitcoin mining ban. What we didn't see was this happen during the COVID era when that capitulation took place, and what we're currently seeing right now, which everyone is believing that this is deleveraging happening within the crypto space from the likes of 3AC, Celsius, and many others. Now, what others are anticipating is that we're going to get some sideways movement until we get a squeeze on the miners to sell off their Bitcoin that they're currently holding. Do we see that take place? Well, if history repeats, yes. But we have our stance that while everyone is anticipating this, we're going to move sideways for quite some time, maybe 3 or 4 months, and ultimately go in the other direction. But we'll just have to wait and see, right? Now, the total hash rate, the estimated number of terahashes per second the Bitcoin network is performing in the last 24 hours. This is a chart over the last 3 years to really understand the security behind Bitcoin. The higher these terahash rates go, the more security you can have in trusting Bitcoin to secure your funds block after block, day after day, year after year. Now, we've seen a nice draw in the hash rate up over time, making the network more secure. And as you know, in the summer of 2021, there was that huge hash rate capitulation along with the price. This has to go with all those mining networks going offline in China because of that ban. But ultimately, new mining has taken place over in America and all across the world, making Bitcoin even more secure than it was during the peak of the all-time high at that time in 2021. Now, what we want to further understand about this chart and explanation is that mining hash rate is a key security metric. The more hashing computing power in the network, the greater its security and its overall resistance to an attack, a 51% attack. Although Bitcoin's exact hashing power is unknown, it is possible to estimate it from a number of blocks being mined and the current block difficulty. So as we zoom out and take a larger look at the total hash rate from the inception of Bitcoin into what it is today, as you can see, the massive climb that Bitcoin has had over the last 4 years. And we only can expect this to continue, creating more security for you and I using the Bitcoin network. Now, this is a hash rate distribution. These are all of the different mining pools out there in the ecosystem, or some of the larger ones. Unknown is obviously smaller entities, but also unknowns can be these larger pools such as F2 pool or ANT pool, using different tags or using different addresses and creating an unknown where that block should be given credit for the mining estimation, that is. But this will give you an idea if no one's really holding a full 51%, and Bitcoin has never been attacked before. Of course, there might be attempts at attacks here and there, but there has never been anything close to having a successful 51% attack on the chain itself. Now, this is where our conspiracy theory gets a little deeper. Bitcoin energy consumption. As the cost of energy increases from 2021 as well as into 2022, 2022. Now, as that happens into this year, it's being more difficult for some of these miners to keep their operations running. And could start to see a capitulation happen within these miners and forcing them to sell off their Bitcoin holdings that they have. Ultimately, again, being the catalyst that we saw back in 2018 for that final capitulation for the Bitcoin price, and allowing some big hedge funds or individuals out there looking to collect Bitcoin up at some low prices an opportunity to do so. Now, why we have a little bit of a different conspiracy or different ideas, just looking at this chart, understanding this final capitulation here happened in late 2018 for the energy consumption. We saw this happen during the COVID of May of 2020, as well as what we're currently seeing today during this time. Now, ultimately, we did fall a little bit harder on a second go round. We're getting a little bit of relief. Do we have a final capitulation down the line? You just got to wait and see, right? But we are making our stand that this is potentially where the bottom has taken place. And ultimately, we have brighter days ahead of us. But you also have to keep in the back of your mind, there is a further capitulation potentially down the line. Now, total circulating Bitcoin, we go over this all the time. 90% of all Bitcoin has already been mined. We are over 19 million Bitcoin. Less than 10% of all Bitcoin is left in existence to be mined. Less than 10%. So this is what it means. Block time, less than 10 minutes per block. Current block reward, every single block, every single 10 minutes currently, roughly, is 6.25 BTC entering the market. This is an annual issuance of 328,500 BTC entering the market per year. So that amount of Bitcoin entering the already 19 plus million Bitcoin in existence is an inflation rate of 1.72%, roughly. Now, of course, the more Bitcoin enters the market, that inflation rate loses its value. Once we get to the next halvening, the inflation rate is going to be cut in half, theoretically, down to 0.86%, roughly, as well, of the amount of Bitcoin to enter the market on a yearly basis. So every 10 minutes, there's about roughly 6.25 BTC. And then every hour, there's roughly 37.5. Every day, about 900. Every week, about 3,000. And that gives us our annual issuance. And the Bitcoin miners are currently taking that 6.25 BTC that they're being rewarded and holding on to it. That is new supply in the market, but those mining addresses are holding on to that BTC. There is a lot of bad actors out there, or people that are ultimately trying to make it difficult for these miners to hold that BTC. and trying to force sell them into the market or onto these exchanges. And that's the game we're seeing played right now. Can these miners hold their ground and ultimately hold on to that BTC, or are they going to be forced to sell and we're going to finally get a final capitulation and rip that band-aid right off? I'm hoping that these miners can hold their ground and hold on to that BTC, and we can start to get a nice U-shape out of this market instead of that V-shape quick bottom and dip out, and let those people that are trying to accumulate as much Bitcoin as possible not get some cheap Bitcoin from these miners. Now, this is some visual aids here, understanding how many times, or less than 3% of the entire existence of Bitcoin, as you can see in these columns here, have we been under the 200-week moving average. So as we fall under back in early 2022 or 2011, mind you, I'm stumbling all over the place. We did so early in 2015, where we fell below that 200-week moving average. Did so back in late 2018 when we finally had that final capitulation. Did so during the COVID era, and now we're doing it again in 2022. Only 3% of Bitcoin's entire existence have been below these levels, meaning these are generational buying opportunities for Bitcoin. Yes, we can further capitulate down, but you will never get better opportunities to buy Bitcoin than what you're getting today at this moment. So just keep that in mind as we move forward in these cycles, and understanding as we break it down into 4-year cycles. The halvenings here are your columns, and every single time we've had a halvening, see what happens to the Bitcoin price. Every single time. Okay? Even here, even though we didn't get a huge blow off top from where that halvening took place, and everything you're doing right here is anticipation for the next Bitcoin halvening, which is estimated around May 4th of 2024. And that's going to, of course, extend into 2025, where you're going to finally get a larger blow off top. And we're all going to have a fun time trying to predict where that blow off top takes place. But everything we're doing right now leading up to that halvening is accumulating Bitcoin and accumulating other assets, of course, because Bitcoin leads the way. But this halvening has always been important to the market, and it will continue being important to the market. So as we end this video off, DCA, final DCA in for the first half of the year, $100 right into Bitcoin at this price, almost getting ourselves a 500,000 Satoshis. Weekly accumulation is at 7.3 million Satoshis in total since we started accumulating. We bought Bitcoin at $46,000, and now it's all the way down at 20,000. Now 43.5% loss currently on the weekly, almost a full 50% loss on the monthly. But look, we're here for a long time, not just the good times, and this DCA is going to lay it out perfectly when we're still doing this years down the line, so that way you can follow us week after week, getting into Bitcoin, the #1 asset to hold for the rest of your life. Once you buy Bitcoin, you don't sell Bitcoin. All right. Till next time, everyone. I hope you guys enjoyed this video. Peace.